In this video, we are going to talk about my Gamma workspace. There's some new toys in the redesign of Volland, so I'm going to talk about what my workspaces look like and how they are integrated into each other. First, the dealer gamma hedging widget right here. You can see this one right here under summary gamma. And the purpose of this one is to accumulate all of the gamma in each of these strikes into an easy to read red for bearish, green for bullish type of interface. This is basically the same as the cumulative gamma chart, and the candlesticks are every 10 minutes for the past week. So when I say for the past week, what I mean is for the past 7 calendar days. And so it's usually about 5 trading days, maybe 4. As you can see, gamma does have an impact. I mean, we're looking here at bearish, but in this gap right here, where there's a very large green right here, where it's a bullish gamma outfit, we took off, right? We had nothing stopping us until we started reaching these red bands. So this is a very effective, nice tool to look at, and it's pretty easy to use. The tooltip here is just showing you the candlestick, the time of the candlestick, the open, the high, the low, and the close. So this is showing you how the dealers impact the market. And if you see it slicing through the gamma strikes, which happens sometimes, then you know gamma is not as much of a issue. But it seems like for this week, gamma really showed what it can do. And see how it hangs up in these bearish gamma areas, but seems to cut right through, goes straight up in the green areas. It happened even over here at 620, right here into the 5500. So I guess we could see a little bit of resistance right up here. These gamma stripes are done all expiration, so it's just showing you net gamma. If you want to know the values of each of these bands, you can use the cumulative chart to determine that. So moving over here, this is the regular gamma exposure. This is the same chart as what's in the old Volland design. It's just the exposure at each strike. You can zoom using these bars here or with the scroll bar in the middle of your mouse. And you can even move your zoom left or right. This little line here shows you where the large amount of gamma is. So here you can see there's a large strike here, 5,500. This is the gamma exposure at that strike, 500 million. Over here, we have some statistic widgets. We have aggregate gamma and aggregate delta. Aggregate gamma is the same as the gamma and the summary page in the old version, where it is telling you how much in gamma terms dealers have to buy in order to be fully hedged. Just as a side note, when we show these numbers, we are assuming that no hedging has been done for the whole day. So it's not necessarily true. I wouldn't, start taking these numbers as gospel, but right now, dealers, as far as gamma goes, dealers are buying 3.4 billion notional in SPX. Over here, though, aggregate delta is a very important number. And the reason why is because the aggregate delta is accumulating not just the deltas related to gamma, but also the deltas related to Vanna and Charm, but also the new positioning. So if there are a lot of puts being bought or calls being sold by customers, that puts the dealers in a positive delta situation and they have to sell. So this also helps with visualizing how much deltas the dealers have to buy or sell in order to hedge their new positioning, as well as all the gamma and Vanna positioning that we've had before. So this is a very key number if you're looking. This would be the same as the summary total in the old version of Volland. So this number right here is pretty important. Over here, this widget, the dealer premium widget, that would be in the statistics. It's the last widget that we currently have. This one is one that what we do is we take our fair value calculation and we calculate what the execution price is from that fair value and aggregate all the differences between the execution price and the fair value price. This we are assuming is the premium collected by the dealers. That dealer premium shows all tenors, all options in the underlying, in this case SPX. And the zero DTE dealer premium is all of the premium only for zero DTE options. So right now the dealers have collected 20 million in zero DTE dealer premium. When we look at zero DTE, we notice that there are a lot of puts being bought. So this is an area that we could see when particularly when there's like a Citial paradigm or Bank of America paradigm, this is a key number because this tells you how far away dealers want to collect on the exercise of the options or don't want to pay on the exercise of the options in order to make some money for the day. So the dealer premium is a nice new little toy that we have. It is not on the old design, and it gives you some interesting context to what you see on the screen. Down here, we're looking at the cumulative gamma chart. This is the same as what's on the exposure in the old version. Nothing really new to report. Zoom is the same as the other exposure chart as well. Personally, I like to have the exposure charts of puts and calls up as well. But just the fact that I can have it up here at the same time as these other exposure charts is a cool little feature, just the widget method of doing this. But if I want a really quick look, customers buying puts or customers selling puts, what's going on here? So if the dealers are negative gamma in puts, that means they are short puts, which means customers are buying quite a few puts here in the 5480, 5475 in this area. So this is an interesting region for dealers. If we break down below here, I mean, there's a possibility that this can get ugly. So, but here in calls, we see that there's that huge strike up here, 5500, is very strong calls, positive gamma, which means that customers are selling 5500 calls. And you see that it kind of gives you a lot better context than what you see in the mix in the puts and calls. And helps you make your decisions as to which strikes you would want to have stops on, eyes on, whatever. So, and then another new toy that we have, this is the aggregate gamma trend. This is the end of the day total gamma, aggregate gamma across all strikes and all tenors. It's a time series for the past 6 months. It's like a histogram of the total aggregate gamma on each day. So as you can see right here, the gamma has been going up. When gamma is going up, that means you're probably heading into dealer long call area, the short calls for customers, that part of their column. Right here, this was the last trading day, June 18th, and we're looking at $894 million of aggregate gamma. As this gets higher, it's a little bit more of a resistance. You can see up here, you see a lot of the red up overhead can be attributed to these kind of gamma dynamics. You can't look at the whole cumulative chart, by the way, here, just because this is giving you a good idea of what it looks like, but really you want to see the cumulative chart to see how red really are these red bands. So you could see it here. Okay. So now if this as an example, since I'm looking at my gamma workspace, I can see that obviously this 5500 strike is a very large resistance, right? As far as gamma is concerned. When we check out the Vanna, it'll probably appear as a massive magnet when we check out the Vanna workspace when we get there. When I'm looking down here, it just appears that 5500 is dominating everything. It is in June. As soon as this June OPEX happens, which is tomorrow morning, this huge strike will go down. We're probably seeing today a little bit of this bounce here. We're probably seeing a little bit of the gamma, the gamma and Vanna really hedging that is happening on an OPEX because of this 5500 strike. If you notice over here, you're seeing that we're adhering to these green and red bands pretty well. I mean, yes, that we're breaking through some of them, but it's holding up here at the red one until it breaks through the green one. And then after the green, it holds up at this 5500 red, this huge bearish strike that you can see right here. So you can see it's adhering to these red and green bands. And so you can look at this and, create some stops. Now it's going to be hard for this market to get through these green strikes right here. It tried earlier in the day and it didn't work. So So it looks like, yeah, when I'm looking at the candlesticks now, we're holding up now in this red zone right here. So it's a really cool tool to show you some support and resistances from Gamma, right? We don't really need to talk much about the puts and the calls, but this is kind of confirming that there's high resistance in this area, and that's likely at 5,500. Okay, thank you very much for listening to this video, and may Volland help you in your trading ventures.